Hey, glad to have everybody here with us tonight. This evening, rather. Um, like Nick said, we uh we got a lot of good information for you here tonight, and this is really just scratching the surface of what we have to offer you all in the real estate world. The ultimate goal here is if this content is something that is beneficial to you, if you're needing to access capital for these real estate deals and so forth, and wanting to strategize how best to go about these deals, that's what we're here for. I've already dropped a link in the chat that is to KC Capital's Calendly link. You can go on there and schedule a meeting, and uh, you know let us dive one on one with you further into what you have and what kind of deals you have available, what your situation is, and how we can get you access to what you need to be successful. We started a little background on KC Capital and our team. We don't come from a hedge fund family. We don't come from money, so to speak. We access this capital in the same ways that we're giving you the information on how to do it. So a lot of these strategies that we're mentioning, it's not just we're not teaching it and not doing it. This is how we started. This is how we started in real estate. This is how we became successful in real estate, and this is how we scaled real estate. And we continue to do this on a daily basis. So we're here to spread that knowledge and and get you access to what you need to be successful. So, like I said, this is kind of a 1,000-foot overview of capital and what you can do to access it. And just feel free throughout the webinar. We'll continue to kind of drop that link in the chat so it's there available. But if it's interesting to you, if it's something you feel like would be beneficial, go ahead and schedule that meeting so we can look at your situation individually and come up with a good plan of action to get you access to that capital and to make you have success in the real estate world. So, without further ado, unlocking capital for real estate. So, the one question that seems like a really obvious answer is, why do I need capital? Right? Well, everyone's like, well, obviously you need money to make money. And that's true. But there are a lot of strategies right now that that necessarily don't require any capital, so to speak. I see someone already in the chats talking about wholesaling. Wholesaling, it's a strategy to make some money. It usually doesn't require a whole lot of capital. You need some, but usually it's a minuscule amount. There's other strategies, right? But those require little to no capital. But the issue with these models, they're great to get started, but they don't build wealth. They don't build generational wealth. They don't build passive wealth. They're active income. They're things that you have to actually actively work for to achieve. The moment you stop going out and searching for deals, and the moment you stop going out and putting these deals under contract, is the moment that you stop making money. So the goal here is, how do you build passive income? How do you build cash flow, right? Those are the trending words: passive income, cash flow. How do you build those things to be able to live the life you want to live, cover the expenses you need to cover, and to pass that on to, the next generation and build that legacy? Grant Cardone, I'm sure many of you are familiar with him. One of his quotes is saying, don't figure out how to cut your expenses, figure out how to make more money. So that's the goal in everything, right? So figure out how to make more money. And that seems like a tall order or something that would be difficult. But if you can master these ways to access capital and to implement that capital, right? So the first thing is to get access to it. And a lot of people here probably don't even realize that they're already sitting on the capital they need. They just need to figure out how to unlock it. And we're going to dive into that. But then once you get it, what do you do with it? We have people. I had someone just yesterday in my office that is sitting on $750,000 worth of capital that they didn't even know how to get access to it, right? So, and we're helping them unlock that. We're helping them get access to that capital. we're connecting them with the right people, and then we're helping them strategize what to do with that capital after they get it. So, passive income versus active income. Active income, it requires your time. And that's the number one problem, that nobody in this world has enough time to exchange in order to become wealthy. So no one ever became wealthy by exchanging their time for money. So we need to talk about and those strategies that really don't require a whole lot of money, wholesaling, things like that, they require your time. So what we need to do is figure out how to move from exchanging our time for money to money being created for us passively. So passive income, what are some examples of passive income? Income from investments, right? So that's income from retirement accounts, stock market, real estate investments, rental income, that's passive income. Dividends from real estate funds or syndications. And those are all examples of passive income. Combining this passive income with massive action, right? So now we're not taking action, exchanging our time for money, but we're taking these methods of getting passive income and combining them with our actions to create more passive income. This creates a wealth snowball effect. So combining massive action with strategies to produce passive income. If you were to take the same effort that you put in your 9 to 5 job and put that effort into creating passive income, it's going to create that wealth snowball and make all the difference. So let's start with the most obvious access to capital that you could have is liquid assets, right? That's the money in your bank account, the money in your savings account, any cash reserves that you have, or stocks and bonds, right? Stuff that's liquid, stuff that's easily accessible. So that seems so obvious, and everybody's probably like, "Why did I come here to get told that?" Yeah, that's obvious, but we got to mention it, right? So these are things that super easy to access. The problem with it is not a lot of people got it. So how do we move on past that? But if it's there, it's good to use. But there are some cons even to liquid assets, and we're going to talk about that. So the next option is loans and credit cards. So we're talking credit cards, business loans, personal loans. Um, the thing about loans and credit cards is that you need to make sure you have a plan of action to implement this capital and to distribute it quickly and start making money with the money that you've borrowed. So you want to create a detailed plan to ensure that this cost of this capital that you're borrowing is less than what you're going to make from it. And anything that you make from it above that's profit, and that's good. So we once again, this is kind of a 1,000-foot view of some of the things that um some of the ways you can access capital. So if you want to dive into this, if you want to see, hey, what loans can we qualify for? What credit cards can we get? We have access to people, lenders, credit card companies that has 0% 12-month financing on some things. And our team has access to that. We have people that have specifically used that strategy to get into real estate and to fund their deals, and they've had great success with it. So we can set up a one-on-one with you and meet with you and talk about, what will work best for you and how you can implement that same strategy. So let's compare liquid assets to loans and credit cards. So most people would say, well, if you have liquid assets, that's better than getting a loan or a credit card. And that's not always the case. So if you ever look at anybody that has, become a millionaire or a billionaire within this industry or in any industry, they didn't get there paying for things in cash. They got there using debt, using leverage. The issue with our society in general is that we're told that debt is bad, and debt misused and used improperly is bad. But debt is the key to wealth. Debt is how you leverage your money and can become wealthy. What do you have to do to make that work? You have to strategize. You have to plan. You have to um make sure once again that plan's there, that the cost of that capital is not completely offset by what you can make from it. So having a good strategy, a good plan in place, debt is the key to wealth. And that's some backwards to a lot of people. But I can, like I said, schedule a meeting. I can show you. It makes nothing but sense. Um, so liquid assets, right? What's a pro to that? It's super easy to access. You go to the bank and you get your money and you put it into something, right? But what's a con to that? You have a potential depletion of reserves. So if you need some capital to operate, you might have to deplete most, if not all, of your capital in order to make this investment. And now you're stuck at zero, right? So you need to keep some cash reserves. You need to have those things. So you don't want to deplete those. In addition, right, without leverage, the cash that you receive in return on that investment, that return is diminished. So, for example, let's say that you want to make $100,000 investment. Okay. So you make that $100,000 investment. If you make $10,000 from that $100,000 investment, you made a 10% return. Now, if I can make that same $100,000 investment using debt, using leverage, and I'll only have to put $10,000 down and I make $10,000 from that investment, what's my total capital invested? 10,000, right? So I just made 100% return on my money because I leveraged my money. So that's how you can increase your returns quickly by leveraging. Now, let's say you got that same $100,000 and you want to make an investment. Now, $100,000 is all you have. If you make $100,000 investment, you just used all of your money. But now let's say that you leverage that money and you use debt and you only have to use $50,000 of your money to make those same investments. Now you can make $500,000 worth of investments with that 50,000 and you still maintain 50,000 cash reserves. So it's very strategic. It's very a thought out plan of how best to do it, and every situation is different. So with loans and credit cards, once again, we just talked about it. Detailed planning is required to ensure that this cost of capital is less than the profits, but you're able to maximize your investments and do more with less while maintaining reserves. So, retirement accounts. Now, the great thing about retirement accounts is almost everybody that has a traditional W-2 job generally has one of these. We're talking about employer 401ks, IRAs, and some even have 401ks or IRAs from a previous job that they forgot existed. Most people do not know that this capital is accessible. And then the general response is, well, it's accessible, but I have to pay a fee or I have to pay a penalty and I have to pay taxes on it. We have partners that are able to take your 401k funds, take your IRA funds, put them into a self-directed IRA that's going to cost less fees than what you're paying right now, and you'll be able to access that capital to make investments into real estate. So that is a major amount of wealth that a lot of people are sitting on that they don't know how to access. We can help with that. We can get you access to that through our partners, and it's probably going to cost you less, in annual fees than what you're paying your existing 401k or IRA provider. In addition to that, um, once again, think about this last year. A study came out from Fidelity. Fidelity is a major 401k IRA provider that on average retirees lost 27 to 30% of their 401k balance in 2022. Now that's a huge hit. If someone has a balance of $200,000, that means they lost $60,000 in 2022. So that's major. And while for someone that's maybe 35, 40, 45, 50 years old, they have time to recoup that. But that means, what about someone that's 65, 67, 68? That 200,000 is all they had. They're already retired and they just lost 30% of their balance. And with the time it takes for market corrections and just the minimal returns that a 401k or IRA produces in general, they're never going to recoup that. So we have been able to partner with many people that experience those losses and get them out of those 401ks, IRAs, tax and penalty free, and move them into a self-directed IRA with our partner companies. And they've been able to come invest into real estate. And some just this quarter have recouped about 25 to 30% of what they've lost. So they'll be on track to get that back, hopefully most of what they lost by the end of the year. So in reality, that's a crisis that nobody's talking about. But yeah, so we're here to help try and mend that. All right. And then another avenue of capital is existing real estate. So maybe you own the house you live in. Maybe you have a rental house that, a lot of people just have one or two rentals here or there. Um, you can access the equity in that house without having to sell it or get rid of it. You can sell. That's one option. You can refinance. So those are the two obvious options, right? You can sell or you can refinance. The problem is that maybe your income doesn't qualify for a refinance. Maybe your credit doesn't qualify for a refinance. Maybe you don't want to sell your property because you live there and you're going to have to find somewhere else to live if you were to sell it. And that's where our sell and stay program comes in from KC Capital. We will buy your house at 100% of the appraised value, and you will receive 75% of those proceeds minus closing fees in cash and any payoff you may have. So depending on what your debt is on your property, but you will receive the difference in cash, and you'll be able to use that cash to go out and make these moves in real estate. That 25% that remains is your deposit. It's your option deposit. And what this means is that you now have the option to purchase that property back from KC Capital, and for the same price at which we sold it. You sold it to us, and you're able to purchase it back. You retain all appreciation. So let's say that 5 years goes by and you decide, hey, I'm ready to exercise this option. I want to buy it back. Whatever it's gone up in value, you retain that appreciation. So you buy it back for whatever we bought it for. So if it went up 25, 30, $40,000, then you're able to come back and purchase that property back and still retain that appreciation. We have a deal right now that we've done that with, where we actually were on the other end of that deal. So we sold our property, one of our properties, on a lease option. We leased the property back from the person we sold, or the company that we sold it to. And this was 2.5 years ago. And we have since are now about to buy that property back at the agreed upon price that we sold it to them for. And now, once we buy it back, we do a little bit of rehab and we sell it. That property has appreciated by $160,000 in the past 2 years. So we were able to access the capital in it at the time, and now turn around and exercise our option and sell it back and make $160,000 profit. So the sell and stay program is extremely lucrative, and it's here to help you get access to that capital that you need. So what are some pros? What are some cons from retirement accounts and your real estate, right? So retirement accounts, one of the great things about it is that a lot of people have them. They're widespread. Almost anybody with a W-2 job that's had it for any length of time generally is going to have some kind of retirement account. The drawback to retirement accounts is we have to legally, these 401k companies, they have to give you your money, right? But sometimes they can be a little bit of a pain and be a little slow unclenching that fist on your money. They want to keep your money. Um, but it's all right. That's what we have our team for. That's what we have our partners for. They're able to navigate that majestically and get that done for us. But sometimes certain 401k employer accounts, if you're still employed there, have restrictions on what can be withdrawn, right? But the only way to know is to ask, and something's better than nothing. So we can definitely get you connected with that and make sure that we're getting you the most access you can to your capital. All right, and existing real estate, kind of what's a con to that? The only real con to that is, all right, you need to have some real estate that you can tap into. But the benefit to that is there's so many avenues that we can take to get you access to the equity in those properties. Once again, I put that in parentheses that, talk to our team, set up a call, set up a meeting. The only way we can know if you have an avenue to access capital that you need is if we talk about it. We hear your scenario because every scenario is different. And all of these different ways that we're talking about how to access capital, they're tried and true methods that we've used as a team and each member of our team has used, but they're also born and developed from the need for capital, right? So we're like, hey, we need some capital. How are we going to access it? And when we figured out those ways to do it, this is what we came up with. Now, we might get a different situation from one of you all that you say, hey, this is my situation, this is what we have. And there's a very good possibility the next time we have one of these events that there's a new slide with the solution that we came up with for you all, because that's what we do. We solve problems, we come up with solutions for what needs to be done. So the one of the biggest things that I've taken away from the past 2 years in this industry and in this market, with how volatile the last 2 years have been, is that the worst thing someone can say is no. The why can't we do this? Why can't we access capital this way? And you ask enough people the right questions, you figure out a way to get it done, and that's what we're about. So we've talked about a high level overview of 4 ways to get some capital, right? Now, what do you do once you get it? Where do you go from there? Because money just sitting in your bank account is not good. I don't remember the exact statistic, but I believe $1 million in the early 90s is an equivalent to $400,000 now. So no capital really is better than stagnant capital, because if you have stagnant capital that's just sitting in your bank account, you're losing money every day. You're losing what it can do. So you got to make some money just to outpace inflation, just to outpace uh, you know, the rising cost of goods and services. So first off, we talked about it a little bit in the beginning. Leverage is key. Leverage is everything. So if you want to maximize your returns, if you want to maximize the speed at which you can grow your wealth, leverage is key. Debt is key. And we all have a limited time here on this earth. So time, velocity, speed is everything. So, today is the day to take action because we're not promised tomorrow. So, sometimes you just got to dive feet first into it. The very first real estate deal that I did, I had no idea how I was going to pay for it. I had no idea. I didn't have financing lined up. I didn't have a lender lined up. I didn't have a team. All I knew is I knew how to swing a hammer and I could figure it out. So we put our first deal that we did under contract and had no idea how we were going to get it done, how we were going to buy it. Sometimes that's just what you got to do. You got to jump into it head first and figure it out. And from there, we just kept doing it over and over and over again. So delaying and putting things off till tomorrow or till you figure it out, I can promise you, you will never have it all figured out. There will never be a right time to jump into a deal. There will never be the stars will never all align for you to make that first move and to make that first deal. Sometimes you just got to jump into it head first and say, hey, I'm going to do it and I'm going to figure it out as I go. So, but we're here to help with that as well. So from what we've experienced and what we've done, we can kind of help you plan that out a little better. So maybe you don't have to dive head first without really knowing what's coming next. Um, but you do need to make that first move, make that first step, immerse yourself in it, and uh, make that move to start your real estate journey. Like I said, if you're waiting for everything to line up, it's never going to happen. Um, I have a great broker friend of mine, and he was talking about how people want to save up to buy a house, right? Like a conventional method of purchasing a house is a conventional mortgage. And generally that requires 20% down. And so what happens is a lot of people say, "Hey, I'm going to save up." And we're not even talking about investments here. We're talking about buying a house for you to live in, right? He said a lot of people that I have say they want to save up that 20%, right? And they're doing it at a very slow rate. They're doing it as quick as they can, but it's slow. All right. And so what happens? An average home appreciates at 5% annually, and that's on a slow year. 2021, 2022, they appreciated by 22% annually. So if home prices are rising between 5 and 20% annually, and you're trying to save up 20% to buy that house, let's talk about a $200,000 house. So you need to save up $40,000. And let's say you can save up $5,000 a year to buy that house, right? So you need to save up $40,000, 5,000 a year. That's 8 years that you're going to need to save to buy that house. Well, if that house appreciates only 5% in those 8 years, right? So 5%, 8 years, what's that total? That's 40%. So that means that home would go from 200,000 to 280,000 in 8 years. So if that home now increases by $80,000, you need at a 20% down payment, 16,000 more dollars for the down payment for that home. So now you've saved up all this time to get to $40,000 to buy your $200,000 house, only to find out it's now worth 80, and you need another $16,000, which is going to take you another 3 years. In 3 years, it's gone up another 15%. 15% of 300,000 is 45,000. 45,000, 20% of that is 8,000. Now you need to save another 2 years. So now your 8 year savings plan is still turned into 12, 13, 14 years. It's a never ending cycle. Nothing's ever going to line up 100% for you to make those moves. So what do you do with that? You find out other loans, FHA, down payment assistance. You make the moves to make the deal happen. So now is the time to do it. Everything is not ever going to be completely aligned for you to make those moves. And we're here to help you see how you can make those moves in your current situation. So once again, I think Nick or Jason probably drop that link again. Guys, if any of this is appealing to you, if you're even remotely interested in getting access to some capital, making those moves, creating that wealth, going from exchanging your time for money to having passive income, you need to set up a meeting with one of our team. We can walk you through your situation, where you're at, and how it's best to move forward. Because it's not if you should move forward, if you should do something, but it's how we do it. How do we accomplish it? So, talking about debt again, uh, so let's say you get access to this capital. You need to create business relationships with financial institutions. We need to create relationships with hard money lenders. We need to create relationships with private equity, right? How do we do this? One, you need the right contacts. There's a lot of people that say they're hard money lenders, that say they can fund these deals, and they can't, or they won't, or they a lot of what I do currently is dealing with financial institutions and dealing with banks and forging those relationships to further our business and what we do. And if there's one thing that I know, is that a broker or a lender will tell you anything to get you started with them. Yes, we can do this deal. As a matter of fact, the first deal that I was telling you all about, the first deal that I was telling you about that we put under contract, that we had no idea how we were going to finance it. We had no idea how we were going to pay for it. We just knew we needed to find the deal and we could figure the rest out. So we did that. And we were working with the lender, and the lender said everything was good. We were good to go. They were good with the deal. Everything was going to work just fine. We got to 5 days before closing, and this lender uh, just backed out. They backed out of the deal. Couldn't give a good rhyme or reason. Couldn't say why they weren't going to close the deal. They just backed out of the deal. And so we're stuck here. We got 5 days till we're supposed to close this deal. And it's a great deal. This deal, uh, we bought the property for $160,000. We rehabbed it for 40, and it was worth 385,000 when we were done. So it was worth almost double what we had in it. We made $185,000 from the deal. So it wasn't just like, hey, we want to do this. It's like, this is an excellent deal. We need to do this deal. So we're a few days away from the closing table, and the lender backs out. And so we're frantically running out what we're gonna do. And so this is where we met our existing lender and our primary acquisitions lender, our main partner in acquisitions to this day. We forged a relationship with them that has lasted years, and it continues, and we continue to do a lot of business with them. They're actually like I said, our primary acquisitions lender. But we came across them, and I told them, I said, hey guys, listen, this is our first deal that we're doing, but I can promise you, if you can close this thing in 4 days, I'll make it worth your while. And they just laughed, and they were like, all right, we'll do our best. And they did it. They closed the deal, and they got it done. And we've been doing business with them ever since. And I think they would definitely say it was worth their while. We're actually going to be featured on their website here soon. So, and we can definitely make that connection between you all and them, if that's something that fits the plan and that fits what needs to be done. Um, so next, the cost of capital, right? The cost of this of money, the cost of these loans, the cost of credit cards or whatever it may be is only outweighed by what you can do with it, right? So a lot of people in the consumer side of things go, oh my goodness, 10% interest, 11% interest, whatever it is, 15, 20% interest. That cost of capital is only outweighed by how much you can do with it. If someone wants to charge me 30% interest for something, but I can go make a 50% return, that's 20% I get to put in my pocket, and I didn't have to touch my money to do it. So once again, that all goes back to strategy. That all goes back to what you can do with the capital and knowing how to move it and make it work for you. All right, creative deal structures. So we love creative deals. We do creative deals all the time, and just as we are creative in our deal structures, we're creative in how we access capital. So the system is not made the system that we live in, the world that we live in is not made for you to be successful, right? If you want to use everything how it was intended to be used, then you'll never be wealthy. The idea is you need to figure out, hey, how can I use this to make me wealthy? For example, a whole life insurance policy that people use to become their own bank and borrow against it. When people made those insurance policies, they never intended for somebody to do that, but someone found a loophole. Someone found out a way for it to protect their wealth and to help create more wealth. So you got to be creative in what you do. We're all about creativity in our deal structures here. There's several deals that we buy without spending a dime of money. But why? Because of the deal structures, because of the assets that we built through real estate. And then lastly, you know, I always say this, that real estate investing, it takes a lot of work and it takes a lot of effort. There is a lot of trends on social media right now that say, hey, it doesn't take anything to be in real estate, wholesale some deals. That's not hard to do, this, that, and the other. And that's fine. And maybe you get lucky here and there, but it takes a lot of work to be successful in real estate. There in anything, there's nothing that you're gonna just roll over and become wealthy and build wealth without effort and without work. But you can piggyback off of others' efforts. You can piggyback off of a team. There's absolutely nothing wrong with realizing that it takes a team, it takes a village to grow wealth and to build wealth. You can't do it by yourself. If you want to do it by yourself, no one ever became wealthy by themselves. There's someone that's the face of things, right? But everything is built through a team. And you can invest in others' deals. You can become a part of a real estate fund. You can become a part of a real estate syndication and experience those returns and the equity that real estate can bring without having to put all that effort and all that time into it. And without having to take as much risk because you're going with an established team that can really help you build that wealth that you want to generate. And in closing, before we go to a Q&A, just we just announced it on our social media, and I'll give you guys a little one-off. KC Capital was actually selected. I don't know if you all are familiar with Connected Investors, but KC Capital was selected as Connected Investors Investor of the Year for the team leader category. So we were awarded that, and it was a great honor to be awarded that. We'll be at Connected Investors Live in Nashville in July. And we'll continue to have some good stuff coming from that. But so now is an opportunity to ask some questions. The chat buttons at the top of your screen. You can feel free to drop any questions you have in the chat, and we'll do our best to answer them. Once again, the time for actions now. You want to set up that meeting. That's the first step. And let's talk about what we can do to help you get access to some of this capital and plan out what you're going to do with your real estate journey. So do we have any questions already in the chat?
Yeah, Chance, I'll read. We got one from Veronica. I'll read it out. She said, "Do y'all do some training on flip and buy? I know some of it, but have never done it. I'm kind of leery about getting the capital because I don't know quite how to do everything."
Okay. Yeah, so no, we absolutely do. Once again, definitely, let's set up a call, look at your individual situation. But there's a lot of strategies that you can do when purchasing these properties. It's, originally like fix and flip, like flipping a house, like that was the trending thing. Like buy the house, rehab it, and sell it, right? And that was something that was super popular and super trending, and then it was wholesaling. So that is one avenue of real estate investment and a way to make some quick capital. But there are also others that are similar, require the same capital investments, but you can control the exit a little more. So one thing about flipping a house to sell is that you still have to rely on a buyer to come and say, "Hey, I want to buy this house." Right. And that's the risk. That's the risk. What is someone else going to think this house is worth? Doesn't even matter what it appraises for. People don't think it's worth that, they're not going to pay it. So it's a good strategy. We do it, but it's a very calculated strategy, and we can show you that and other strategies that are going to give you a little more control over when you get that money back, when you get that profit, and how you redeploy it after that.